But let's begin this morning with what we are seeing in the meme names, specifically with AMC. As we mentioned, that stock is up almost 20% in the pre-market. It was up 22% yesterday. The stock right now trading at around $40 per share, the record high for Zoom, or for AMC, excuse me, which the stock briefly traded above. I believe it was on Friday's session, was right around $34, $35 per share. So now we are squarely in record territory here for AMC, and the story continues to get more interesting. And let's back up, I guess, before we get to today's news and talk about what happened yesterday. The company issued 8.5 million shares. Mudrick Capital, led by Jason Mudrick, bought those shares for around $27 per share, immediately went and sold all 8.5 million of those shares into the market. And I'm kind of sympathetic here, guys, to the notion of this being a win-win for the company and for Mudrick Capital. Maybe retail investors, in theory, shouldn't be thrilled about this, but many of them might be sitting on gains of, more than a double over the last week. And, Julie, I mean, the company, I think, continues to be innovative is the right word in using its stock, which is clearly a meme at this point, for actual business improvements, like raising a couple $100 million as it did yesterday.
I'm waiting for the business improvements, though. Like, they're raising money to make business improvements, but the business improvements haven't actually happened, right? I mean, we're sort of waiting for that part, I guess. So I guess we'll see how innovative it ends up being. But yes, I agree with you that, I mean, it seems like a no-brainer, not traditional finance, but it seems to make sense to do what they're doing. And as we watch this situation, if you remember back in January, there were a lot of warnings about who would get caught holding the bag, that these retail investors were going to get caught out. And we're sort of still waiting for that to happen. I mean, certainly when the stock came down from its highs, if there were people who had, bought the stock on margin, for example, they might have been wiped out at that point. But we haven't really at least anecdotally, heard a lot of stories about washouts as a result of this whole situation. At some point, will it happen? I mean, maybe if the stock comes down at some point, maybe they won't spend the money, maybe they won't spend it wisely, maybe the story will go back to fundamentals, although it seems difficult to see that happening at this point. But it's kind of hard to know how this story is going to end, you guys.
No, Julie, I think you bring up a very good and important point on there on being a washout. I've been talking to a couple institutional traders this morning, trying to get a sense what is in fact happening here with an AMC and some of these other meme stocks. And the consensus seems to be institutional buyers learned their lesson the first go around, that they were late to that trade in trying to make some money off the backs of that retail momentum. They don't appear to be making that same mistake now. Some institutions are, in fact, stepping in based on what I've heard so far this morning, nibbling at some of these stocks and trying to get some gains and ride that momentum and improve upon what they did compared to earlier this year. But look, the activity is strong and the interest is strong. And I have this chart here from Swaggy Stocks. And over the past, this is a site that tracks social media mentions, and they're looking at Wall Street Bets, that sentiment right now on Wall Street Bets. And you're seeing it really concentrated in an AMC, in a BlackBerry, and to a lesser degree, GameStop. And you see on the right side of that chart, not a lot of other interest in some of the meme stocks that caught up a lot of attention earlier this year. So right now, this activity seems to be much more concentrated into these top three names. I also exchanged an email with the folks at Hype Equity just now. They're also tracking social media mentions, and they are noting this, perhaps a little bit of a warning. AMC's mentions on social media, various social media platforms, is seeing more of a sustained interest at this point than the likes of a BlackBerry. And BlackBerry the shares could start to cool off if you're one to believe in the social media mentions and that activity out there. Hype Equity noting the call versus put mention ratio on BlackBerry is now at 2-to-1. That indicates slowing interest amongst the retail community on social media to push this stock higher. On Monday, that ratio was 3-to-1 here, Myles.
Well, let's get to some of the other AMC news, because we still haven't even covered, if we want to, get all worried about the fundamental case, we still haven't even covered the full story of how AMC continues to use its stock as currency. It's, I think, really just its meme status as currency. The company this morning announcing essentially a new IR website. For folks out there who don't know, every company that's traded on the public markets and some that aren't have an investor relations website. That's where you find SEC filings, corporate announcements, press releases, all that kind of good stuff. Well, AMC is now announcing AMC Investor Connect, which is a place where its retail shareholders, or the company is hoping that its retail shareholders will essentially give the company their information. They're going to get a free large popcorn at the first movie that they go to this summer. Company says they'll have, additional communications from CEO Adam Marino on that website. And AMC noting that, and I think this is probably the most material information here, they've got 3 million shareholders, 3 million new shareholders as of March 11th. And I would imagine that data has probably gone up over time. And the company saying that 80% of its shareholder base is retail, and they want to communicate with those folks more directly. And I think, Julie, we talk about how does this trade end? I mean, I don't really know, and no one really knows. And I think that maybe that answer matters a little bit less if the company is going to lean into this new shareholder base and say, hey, maybe there's a chance that we have something durable here.
Maybe. I mean, and as you noted earlier, when you sent us this thing, they're going to give a free bucket of popcorn to people who sign up on this, but also to get into this Investor Connect connection and website, you have to sign up for their loyalty program, which is called AMC Stubs. So the company's sort of trying to build its consumer database at the same time that it makes that investor relations connection. And I should note, Myles, I think it's fair to say that most companies, while the investor relations website exists, while you can surf it, it's not like they're throwing it out there at you. They're not necessarily trying to lure people in, and certainly not trying to lure retail investors in, most companies, in this kind of a way. So it is interesting, and to use your word that you used earlier, innovative, to try to connect with people in this way. Now, how they're going to use it from here, I think, is going to be really interesting also. And again, I'm waiting for something more from all of this in terms of what it means for the company's business. I don't know if we're going to get it, but it's interesting to watch it along the way.
I mean, go ahead, Saz, go ahead.
No, yeah, Myles, I would just say be careful what you wish for in terms of AMC and CEO Adam Marino. He's been really aggressively out there tweeting the past 24 hours, if trying to welcome and I would say drive up this frenzy and just continue it. Obviously, he has a vested interest in seeing that stock up, but be careful what you wish for, because you could see a lot of folks, if AMC doesn't deliver fundamentally, and I know nobody cares about that right now, but it will eventually matter because that's what drives stock prices, outlooks for future cash flow. And I know it sounds really boring. It's just the reality of it. Be careful what you wish for, because you can see a lot of these retail investors showing up at the home of CEO Adam Marino if they, in fact, lose their life savings because he didn't deliver. So institutions tend to take losses a lot better than retail investors. So I would be careful if I was him.
I mean, look, we're going to look back in 10 years and say, oh, obviously this is how this whole story was going to end. But I mean, we touched on this yesterday, and I would just contrast this with what, George Sherman, outgoing, we should note, CEO at GameStop, how he handled a similar situation with his stock. You can't ignore that this stuff is happening to your stock on the public market. You really only have the choice, in my opinion, of what Aaron and the team at AMC are pursuing, which is trying to find a way to turn the memification of your publicly traded shares into an opportunity for the company. And, in this case, they want to delever, they want to build out their consumer database, they're going to get some people to go to the movies. That's all fine, but this is the market. And I think that for a CEO to just ignore that this is out there happening. I mean, we had, Mark Tritton of Bed Bath on a couple months ago, and he was laughing about the action in his stock, and things with Bed Bath have leveled out, but AMC continues to be a meme. And I think the only choice is to try to find a way to make this work to their advantage, which the company is doing, has done, and probably will continue to do, because otherwise you are probably, as the CEO, at least in one case, probably not going to be the CEO for too long. So, an interesting kind of conundrum there. And I mean, I don't think it even is a conundrum. You have one choice. Here's how you need to proceed. If you choose not to do that, then you can abdicate the CEO position to someone else.